Hey, what's going on, everybody? We are live here with Financial Fitness Friday. Thank you for tuning in. The only thing we ask is that you comment and share this so other people can hear it. And we want to talk to you a little bit about how to make money work for you. All right. At some point, we always talk about you should have some money in savings, some money put aside for investing. I personally do it on a weekly basis. I do it personally on a weekly basis. I do it with my company on a weekly basis. So I always have money going into different things that I never see. It never hits my bank account. And the fact that it almost never hits my bank account or it hits it and it's not there for a while, I forget about it. I live way below my means and I invest in other things. So let's talk about that because there's a lot of misconceptions about money and we want to clear them up for you. First, the only way to truly build wealth, it's never going to be just working alone. Okay. If you think about it, the average person works, I hate to say it, but not 40 hours a week, but let's just say 40 hours a week. Very hard to get wealthy working 40 hours a week. Let's say you're a hustler and you work 60 hours a week or 80 hours a week. Again, very similar situation. Yeah, you're going to be making more than a guy working 40, probably, unless he's super efficient, very smart, selling high ticket, high margin items. But you can't work 24/7. But you know what can? Your money. Okay? You can put it into bonds, stocks, real estate. Don't discount putting into yourself and your business. You can put it into gold. You can put it into digital assets. All right. And what happens is when you do that and you do it wisely and you do it consistently enough, you have your money working for you and you not working for it. Okay. Your money can work around the clock. Now, are we in a difficult time right now? Absolutely. Is the stock market? I think the stock market is actually, I'll tell you right now, because I got a chart up. It's the SPY is down 1.6% today. So, we're seeing a lot of banks fail. We're seeing a lot of things happen in the market. That's a little crazy. But when there's a lot of risk in the market, gold goes up, digital assets go up. Real estate, if it's a cash flowing investment, is good. And if you're investing in your business and yourself, obviously that has probably the highest return. So what we're here today is not to talk about where to invest because I'm not your financial advisor. Okay. However, I can help you grow your business, right? I can give you certain guidelines. Dave can give you certain guidelines in which to operate. So I would tell you the biggest takeaway you should have is make sure that you are investing on a weekly basis consistently. All right, Dave, what do you got on this before I extrapolate on that a little bit?
I think one of the biggest things to talk about is bring it down to a kind of a main street level and create a habit first. A lot of times people aren't even going to pay themselves. I would, if I'm speaking to somebody and our clients, they're main street people, and there are people that, hey, how do I get ahead? How do I get in a better disposition? How do I get out of here? Well, I think one of those things is creating the discipline and habits first before you even get into that. If you're going to try to save and if never saved, you got to create that muscle. Pay yourself first, or put something away. Start saving money a little bit to do something with. And I think once you create that discipline, it's easy to talk about, hey, invest in this, invest in that, invest in that thing. But if you're not pulling that in, at least, are you ever going to start? Probably not. One thing that I think that doesn't get talked about a lot, especially in business people too, is take a look on the back end. Take a look in where your money's going at taxes. I think that's a huge thing that gets overlooked sometimes. Things change year to year. What can you pay out less? You know what I mean? That's kind of a reverse investment if you look at that, and I think taxes a lot of times is something that is talked less about. And I'm full disclosure, I'm not an accountant. Right. But everybody else in here, they'll tell you one of the things I always talk about, hey, what's a tax benefit or what's a pro or con in this from a tax perspective, right? Does this have to go out? Can we keep it back in? How do we look at that? Who do we call? Right. So I think some of those things too, to look at that go a long way when it comes to investing as well.
Yeah. So that's a great. I can give a really really good example of that right now.
Mm-hmm.
So let's say you have some extra money, you don't know where to put it, and you're like, hey, I've been thinking about getting this piece of equipment. Why don't I do that? Okay. Now that piece of equipment should be able to increase your business revenues, make things more efficient, or offer a new service, right? So if you come to someone like me and we do equipment financing, okay, you get the piece of equipment, you still can save some cash. Now, all those payments, okay, the interest on them can be written off, and you should be producing more revenue. And you're building comparable debt, and you're building your business credit, and you can depreciate the equipment that you now own. Or you could do a lease with a dollar buyout, and then each payment that you make, that full payment is deductible, and then you probably, when you buy out that piece of equipment for a dollar, you'll probably take a tax hit, but you would have saved for 4 years in a row. And it's going to be this exact same pricing and structure. It's just a different agreement that you sign to get the finance. So that is a perfect example, Dave, of investing in your business to make more money and have your money work for you, and getting a tax incentive to do so. So things like that. And by the way, guys, education, and again, I'm not an accountant, but I do know that when you invest in yourself and your education, let's say you join a mastermind or get some type of business education or consulting, that is also a write-off too. So you're learning how to grow your business, you're investing in yourself and the business, which should have your revenues grow, and that money is now, that expense is now a true business expense. So those are perfect examples of you taking your hard-earned money and using it to make more money and getting a tax write-off as well. All right, but things like that, that's what you want to look for. If you own a business, hey, what can move my business forward? Do I want to open up a line of credit to pour more money into marketing? What's my return on ad spend, or ROAS? So if you know that you have a business, and that business, for every dollar you spend on marketing, you bring two back, well, why wouldn't you be spending to the max, right? Why wouldn't you want to max that out and essentially break your business to rebuild the business, figure out where in that process it was broken, fix it, and keep doing it, right? Because that's going to obviously bring in more revenue, and it's a great return on your investment. So the name of the game is to be creative, to always analyze and figure out what's going to have the best return. The other thing to it is, if you don't own a business, you don't have the opportunity. You can invest in yourself, or you can invest in some of these asset classes that, the past 12 months have not been kind to, right? Or you can invest in, and again, who knows where the bottom is, but if you're investing every day, your dollar cost averaging down, and eventually you should have a return on that, as long as whatever you invested in doesn't go out of business and is a viable investment. Okay, and guys, a lot of people, I know this, and I'm guilty of this. I've lost multiple six figures doing it. Sometimes you make some bad investments. That's part of the game, right? You invest in a business, you invest in a stock. However, if you consistently do it over the long haul, and you continuously learn from past mistakes, it's easier. And I would say anything that has an automation attached to it, or any of these get rich quick things, you need to vet and ultimately stay away from, right? Because, hey, I was guilty of it. I did the Amazon automation stores. I did, certain businesses I had no business investing in, right? Because it's not my core competency. It goes back to that great book, Good to Great, and the hedgehog concept, right? So the hedgehog versus the fox, and I've been reading this book now for 75 Hard. It talks about the hedgehog is not really as smart as the fox, as cunning as the fox. It only knows one thing. Notice that when the fox is around, it should curl up into a ball and protect itself. That's the only thing it knows. The fox is very clever and knows all these tricks, and knows how to hunt, knows how to deceive. But the problem is, as smart as the fox is, every time he gets near the hedgehog only knows and does that one thing, which is crawl up into a ball. And what that does, guys, is, even though the fox is smarter and certainly better in certain ways, that hedgehog is an expert in that one thing, and that one thing keeps him alive and keeps him winning. Your business, your focus is just like that hedgehog. That hedgehog concept is focus on one thing, become the best at that one thing, and only do that one thing until you are absolutely paid what you're worth, or hopefully more than what you're worth. And then you have a successful business. Then you have successful income coming in. And if you keep doubling and tripling down and just narrow your focus on that one thing, you will ultimately be more successful than the cunning fox.
Yeah, you only need to get great at one thing, and that goes back to. It's funny you say that, man. It's all the average stream is 7 different sources. Well, yeah, when they talk about that, it's usually passive, and they've already implemented that first, have kind of dominated in that sector. You don't want to say it runs on autopilot because you always want to have your hand in that. That's your bread and butter. That's your name on that, you
Yep.
know. So, but dude, that was a great example of that, man. The fox and the hedgehog.
Yeah.
Um, and guys, again, and I'll leave it with this, and because I know we've talked about it the last couple times. Yeah, of course, there's risk involved in everything that you're going to do, but what's the risk if you don't? You know what happens if you don't do it? You know, get in the game, do something.
Yeah. Well, guys, listen, I appreciate you truly for tuning in. Please share this with someone that needs to hear it. We'll be back for Mindset Monday. And that's it, guys. Have a great weekend. Keep crushing it. Appreciate all of you.
Be great.